Good afternoon. I thank AIWMI for inviting me for this seminar and summit. Before I begin, I like to tell a story of a typical politician. He was concerned with investing his money. So, after his demise, he went to the Lord of Death and asked, "Sir, I have earned the way all Indians do, particularly politicians. So, I have amassed huge income and the wealth I want to invest, but I don't want to go to any of these wealth managers. So, can you give me a suggestion where I can invest, but I have a condition. I don't want any return. Rather, I want the investment to deplete." So, like all Indian politicians, he was faced with a lot of court cases. Now, the Lord says, go back to India, take a bath and invest in education, and if possible in credit education. So, that is the story about investment and skill formation, which is always less than what you do. So, here our topic is a little vast, because credit education and financial literacy are tagged together in a country which is struggling hard even for literacy campaigns. So, first let's go a little recapitulation what is happening in India during these days, the turmoiling days and the growth phase, maybe achhe din. And I just want to add a few points that our credit education, the capital markets and the financial sector taken together, means the entire capital market, bond market, the securities market, then the banking sector, insurance sector and pension sector put together. There we need to enable our professionals, most of you are here, with better informed and skills which help you in discharging your professional duties, either as a banker, insurer, pensioner, or even in capital markets, whether in agency form or in any other form, or wealth creators. So, this enabled informed decision should not only benefit your company, to your career, but also to the consumers of your products, the people at large. And that is where the financial inclusion comes in, where our literacy rate does not enable our people to know how and what of the products that they are going to consume. So, our struggle right now, the regulators, the government, the educators, the operators, the industry as such, is that we need a robust system. We need a sort of systems and procedures which we need to follow, want to follow. But at the same time, we are in a chaotic situation where we use our gut feeling and our inclination to decision making. So, it is completely a complex world of I would quote it, a chaotic world where you have to find the discipline inside, whether the stock market, whether it is the entire capital market, whether it is banking, NPA, whether it is insurance, whether it is mis-selling, everything put together. So, how as educators and as operators of these systems, we come out with a solution that enables the professionals and the consumers alike. Right now, on 15th August, from the rampart of Red Fort, the PM has announced the financial inclusion package. It is called JDY, Jan Dhan Yojana, and all of you definitely know about it. I am not going to repeat them, but it talks of certain goals to be achieved, and the goals are in two phases. Phase 1 consists of simple banking products, because it's mostly a bank-led financial inclusion, followed by some processes to achieve it. Means they want to get into an universal access, or for people who are left, say 60% of Indians are left out of the system. So, this is one part where we are talking of universal access, and in the second part we are talking of taking care of certain risks they face in their life cycles through insurance and pension. And that is basically what financial inclusion scheme the PM has announced. Now, looking at those schemes and looking at the way we are educating our people, how to find that golden mean, where whatever we invest in education, whether it is education in capital market, whether it is education in the banking sphere, or financial literacy at the level of the people, how we empower the people, how we empower our professionals. So, this golden mean we have to find out whether you can put the priority to financial literacy, whether you can put priority to capital market skill formation, or you train the bankers as I do in NIBM, that we enable the bankers with risk management, higher learning and skills, or treasury management, everything, so that they take an informed and better decisions, given the challenges within the system. So, our discussion so far will be very formalized into 3 or 4 compartments. So, our discussion forum is now you find all the 4 professionals are here. We will talk of credit culture, Clive Humphrey will do it. Then credit education inclusion will be discussed by Gupta. Then education and skills in capital market and financial analysis, etc., will be done from the NISM angle by Mr. Korivi, and debt market education will be talked about by Mr. Biharilal. Thereafter, we will be brief in our discussion and we will take questions if you have any. Thank you very much, and thank you for the entire summit where we will discuss some of the issues. Thank you.
Thank you.
You can sit here or stay as you feel.
Can I wander about?
Yes.
I've been a credit trainer for 20 years. I can't sit still and talk about credit because I'm trying to work out who's asleep in the room. And a number of people have thanked the Association of International Wealth Managers India for organising this conference today. I'd like to thank you guys for turning up. Thank you very much for coming and listening. Especially thank you for staying and listening to us for the last discussion of the afternoon. So thank you for that. I want to follow on from our chairman's comments there and talk in sort of big picture items. I want to think about the word that I've kept hearing today, which I think is very closely linked to financial inclusiveness, which is access. Access to funds, access to money to be able to live your life the way that you want to be able to run your business the way that you want to do that. And I've heard it talked about in a number of different ways. Access to funds for SMEs, there being a limited ability for companies to raise that money. Access at the large level for large projects. Access for individuals. It seems to me across the whole spectrum of the Indian finance market, the credit market, that there's an access issue that needs to be addressed. We've heard from a number of speakers. Mr. Gandhi this morning from the RBI talked about the problem of access. Dr. Pant, when she was here this afternoon, talked about there being a positive correlation between credit provision and economic growth. Clearly, lack of credit being provided will be a constraint on India's economic growth, and we've had a number of statistics around the level of growth put out this afternoon. In the UK, I don't live in the UK at the moment, and I'm actually quite glad when I look and see some of the things that are happening in the banking market there. In the UK, we've got a problem that SME clients cannot get access to cash. The banks are not lending. They've swung, the banks have gone from what those of us who aren't employed by banks call the greed factor that we saw in the run-up to the financial crisis to what we now call the fear factor that we've seen since 2008, 2009. A reluctance to lend money. Now, why does that happen? Why has that happened? I think it's down to two things. I think management of banks these days, they need to think of the word ACT, A-C-T. The A is for access. How do we make sure the right people get access to the funds that they need to grow their businesses, to finance their lives? And the C of this word ACT is all about culture. We're talking about credit culture. The T is about trust, and I'll come back to trust in a moment if I may. If you go back to the financial crisis, if you look at what happened to many banks, particularly in North America, especially in Europe, I would argue that the absence of a robust credit culture was a key contributor to the reasons for banks' failures. There's any number of reports that you can read from bank examiners, from regulators, etc., which will tell you the same thing. The absence of that robust credit culture and that credit culture actually working in real life in some ways was a failure of financial education, of credit education. One of the things that we're doing now with our clients is we're not just talking to them about how to analyze a balance sheet, we're talking to them about building and maintaining and communicating a robust credit culture that allows the institution to be stable in its own performance, hopefully growing, hopefully becoming more profitable, but certainly showing a degree of stability, which in turn leads to sustainability of credit provision. It allows customers to know that the bank is going to be there over a period of time, that it will provide the credit facilities that it requires in order for businesses to grow, people to live their lives. So for me, a credit culture is a key part of financial education. It's something that we think banks should be really building into the way that they manage their organizations. Risk management is all about having a culture, making sure that people follow it through. My second key point is about trust. Again, if I may, taking examples from other markets. In the UK, and I think it's fair to say in the US, at the moment, bankers are not figuring very highly on the list of professions which are trusted. Yeah. And this all links back to what happened in the financial crisis and before that. Banks in those markets have to rebuild the trust. In your market, a dynamic market, a changing market, a market where, as you said, sir, lots of people actually don't interact with banks yet, you've got to create that trust in the first place. Yeah. For me, trust is all about you as the providers of credit having trust in your customers having trust in you that the information you're asking for and the use to which you're putting that information is to their benefit, and the trust that you will make sensible decisions going forward. Mr. Gandhi also said this morning, he talked about relationship banking helping to mitigate surprises and shocks. I think that's entirely right. And I think the relationship banking approach only works if a robust credit culture is put in place. That robust credit culture will only be put in place if a bank or a credit provider goes through a sensible, structured provision of credit education to its employees. So, we're going to keep this brief as we're towards the end of the afternoon. For me, in order to be able to improve access, in order to be able to increase financial inclusivity for your population here in India, I think banks need to focus on credit culture, they need to focus on building trust so that they can communicate the expectations that they have to their clients, and clients know exactly what they're going to get when they're dealing with banks. So.
Thank you. Now I'll request Mr. Gupta to talk